Before you buy any cryptocurrency, stop for a second. Seriously, stop right now. Because the fastest way to lose money in crypto isn't a scam, isn't a crash, and isn't bad luck. It's buying without understanding these mistakes. Subscribe now because what you're about to hear can literally save you money. This isn't hype, it's experience talking. Most people enter crypto thinking they're early. They're not. They're late, emotional, and following noise instead of logic. And it's not because they're dumb. It's because the market is designed to punish the exact behavior most people repeat. Let's start with the first mistake. The first mistake is buying because everyone is talking about it. If a coin is all over TikTok, YouTube, Twitter, Telegram groups, and even family chats, you're already late. Hype is not opportunity. Hype is the exit liquidity for smarter money. People who win buy in silence. People who lose buy when it feels safe and popular. If you hear, "This time is different," it never is. That sentence has destroyed more portfolios than crashes ever did. Second mistake, investing without knowing why you're investing. Most people can't explain what they bought in one simple sentence. They don't know what problem the project solves, who actually uses it, or why it should exist in 5 years. They just know the price went up. That's not investing, that's gambling with extra steps. If your only strategy is "it's pumping," you're not early, you're the fuel. Third mistake, ignoring market cycles completely. Crypto doesn't go up forever. There are phases of excitement and phases of boredom. And here's the uncomfortable truth. Real money is made during boredom, not euphoria. Most people buy green candles and sell red ones. They buy when confidence is high and sell when fear takes over. That's not bad luck. That's inverted logic. Buying without understanding the cycle is like jumping into the ocean without checking the waves and then blaming the water. Fourth mistake, having no plan at all. No entry logic, no exit strategy, no risk management. They buy and then stare at the chart asking, "What now?" A plan doesn't make you right, but it keeps you rational. Without one, emotions decide for you. And emotions are terrible traders. If you don't decide in advance when to take profit or accept a loss, the market will decide for you. And trust me, it won't be generous. Let's pause for a second. If any of this sounds familiar, you're exactly where you need to be. Drop a like and a comment, even just "I'm here," because awareness now costs nothing, but ignorance later costs real money. Fifth mistake, and one of the most dangerous, investing money you can't afford to lose. Crypto is volatile. Anyone telling you otherwise is either lying or selling something. If you're stressed, if you check prices every 5 minutes, if you can't sleep at night, you invested too much. Fear makes people sell bottoms and buy tops. Calm investors survive. Panicked investors become lessons for others. Peace of mind is a strategy, even if nobody puts it in a course. And this is just the beginning, because the next mistakes are even more expensive. They happen after you think you've learned how crypto works. That's when overconfidence kicks in and accounts get wiped quietly. In the next part, we'll cover the mistakes that destroy people who believe they're already experienced. And that's where most real losses happen. If you think the biggest mistakes are made by beginners, this is where most people get it wrong. Because mistakes number 6 to 10 happen after you feel confident. And confidence in crypto is often more dangerous than fear. Sixth mistake, overtrading. People think more trades mean more opportunities. In reality, more trades usually mean more fees, more stress, and more bad decisions. Crypto doesn't reward activity, it rewards patience. Every time you enter a trade, you're paying a cost, even if you don't see it immediately. Smart money waits, impatient money burns itself out. Seventh mistake, falling in love with a coin. This one is subtle, but deadly. You stop seeing red flags because you want the project to succeed. You ignore bad news. You defend it online like it's part of your identity. Markets don't care about loyalty. They don't reward belief. They reward timing and logic. The moment you can't sell because you're emotionally attached, you've already lost control. Here's a quick reality check. If this is helping you think differently, subscribe now. Not because I want numbers, but because this mindset takes time to build and repetition matters. Eighth mistake, confusing a good story with a good investment. Crypto is full of beautiful narratives, revolutionary tech, world-changing promises. But narratives don't pay you. Cash flow, adoption, and demand do. Many projects sound amazing and still go to zero. If your decision is based only on a story, you're betting on marketing, not value. Ninth mistake, ignoring security basics. This isn't exciting, so people skip it. Until it's too late. Weak passwords. No two-factor authentication. Keeping funds on exchanges long-term. Clicking links without thinking. You don't need to be hacked by a genius. You just need one careless moment. In crypto, you are your own bank. And most people don't treat that responsibility seriously enough. 10th mistake, and the one that ties everything together, expecting fast results. Crypto has made people rich, but not instantly. The market rewards those who survive long enough to learn. People quit right before they understand how it works. They want life-changing gains without life-changing discipline. And that's not how this game works. If you've watched until now, here's the most important takeaway. You don't lose money in crypto because the market is unfair. You lose money because you repeat behaviors the market is designed to punish. Once you stop making these mistakes, the same market feels completely different. If this video saved you even one bad decision, do yourself a favor. Subscribe, comment which mistake hit you the hardest, and share this with someone who's about to buy crypto without understanding the risks. Because losing money is painful, but losing money from avoidable mistakes is worse.